Hello, and this is Global Business Insights, where we look deeper at the headlines from a business perspective. Starting off with some good news, China's Services Purchasing Managers Index, that's PMI, jumped from 51.2 in June to 52.1 in July, beating market expectations of 51.4. The index has also now stayed in expansion territory for 19 straight months. The indicator for employment in the services sector also saw the highest reading since August 2023. Germany's services sector recovery lost momentum at the start of the third quarter. That's July services PMI coming in at 52.5, less than 53.1 in June, also a 4-month low. The July composite PMI also slipped into contraction at 49.1 from 50.4 in June. In the Eurozone, July composite PMI output index was 50.2, slightly below 50.9 in June, and a 5-month low. Services sector in July PMI at 51.9, also lower than 52.8 in June. That's in the Eurozone. The S&P Global UK Services PMI, that's showing business activity, posted 52.5 in July. That's UK services, a slight increase from June's 52.1. It also signaled a modest but accelerated pace of expansion in output levels across the UK services sector, and also the first time since April that growth has accelerated. And still in the UK, the Chancellor Rachel Reeves is beginning a 3-day visit to New York and Toronto today to sell Britain as a stable place to do business following Labour's election win last month. This comes ahead of an international investment summit that Sir Keir Starmer, the Prime Minister, will host in mid-October to encourage investment as part of his growth strategy. Also, later today, economic data due out include the July ISM Services PMI for the US. That's a measure of the performance of US services companies that is expected to show a rise to 50.9, up from 48.8 previously. Israel is bracing for attack from Iran as the assassination of Haniyeh delays ceasefire talks until Hamas can appoint a new interim leader. With talks delayed until both Israel and Hamas can get their affairs in order, the chances of escalation of tensions increase. Global markets ended last week in turmoil as this Nasdaq slipped into correction territory and other indices were battered as fear and panic drove a sell-off, and investors dashed for safety into gold, yen, and American Treasury bonds. It's not just one thing, it's the tense geopolitics, mixed bag in terms of tech performance, and the tepid US economic data and soft jobs report compounded old concerns that stocks were overpriced. But year to date, performance of equities are still well above the average. The question many are asking, are there more losses coming, or is it the time to buy the dip? Nigeria's President Bola Tinubu yesterday called for suspension of protests against a cost of living crisis, making his first public comments since frustrated citizens took to the streets last week. Analysts have been critical of the president's speech, saying he did not seize the opportunity for a constructive way forward. In Germany, as composite PMI slipped into contraction, business activity growth eased for the second month running across the German services sector. The loss of momentum contributed to the first decrease in employment in the sector so far this year. On a positive note, business expectations nevertheless improved slightly, albeit only partially reversing the previous month's notable decrease. Also, on the inflation front, average prices charged by services firms registered the slowest rate of increase since April 2021, though still elevated by pre-pandemic standards. Cost inflation, however, ticked up slightly after having been at its lowest for over 3 years in June. And in the Eurozone, data just coming out showed that the economy stalled in July as demand for goods and services deteriorated and output price inflation cooled to a 9-month low despite stronger cost pressures. Indeed, after a promising start to the year with economic growth reaching its strongest in a year in May, July activities signaled a further loss of momentum. In the UK, it was a better picture as services PMI accelerated. Demand for UK services rose at the fastest pace since May 2023, while business confidence rebounded to a 5-month high. Indeed, it was the strongest upturn in demand since May 2023. Employment in the UK service sector also rose at the fastest pace in over a year, while business confidence rebounded from June's recent low. According to Joe Hayes, principal economist at S&P Global Market Intelligence, he said with the general election period coming to an end at the start of July, we're seeing a modest rebound after a fairly subdued end to Q2. We will get US data later in the day. So far, Europe still looks quite subdued from an economic growth perspective. The momentum earlier in the year in the Eurozone is now stalling somewhat, and inflation is looking stickier. The UK rebound looks quite robust as a post-election boost seems to be helping, given the less uncertainty and the fresh optimism. In a televised address on Sunday, President Bola Tinubu appealed for dialogue while defending a painful yet necessary decision to remove fuel subsidies and abolish multiple foreign exchange systems. According to Amnesty International, they say at least 13 people were killed. The police denied using excessive force, saying deaths were fewer, adding that most died from an explosive device during a march in the Tinubu listed achievements expected to assure Nigerians that the government was on the right path, but most criticized the speech as focusing more on activity and campaign like to-dos and less on impact on the hungry populace who are in need of jobs and rescue from a fast expanding poverty. Improved revenues and better oil production mean little if quality of the average life of Nigerian is not improved and gains are frittered and drained out through many leakages. Even with best of intentions, appointments, and good declarations, strong status quo interests and very weak legacy institutions means a lot of resistance to progress has to be tackled, especially at the micro level. There is also need to focus more on impact, not just activities, especially on well-being of people, with surveys and new metrics to track progress. Communication and change navigation also falls. Communication and change navigation also is falling quite short. Others saw a lack of compassion in a speech that did not connect with the anger and anguish of hungry people. Instead, it came across as unsympathetic and defiant. Others criticized the poor handling of the entire protest by the police, who are reported to have shot at protesters. We still don't have a confirmed account of casualties and how they died. Analysts continue to point out the disconnect with micro-level pains and issues and a familiar activity trap that previous governments have fallen into. The absence of data on jobs created, on openings, on retail sales, on investor confidence, and surveys on impact on people lead to familiar false conclusions that all is well. At the grassroots, all people see is an oversized, extravagant government and legislature with a sprawling, unimpactful cabinet. And of course, the opposition continue to showcase all the failings, even as Aso Rock appeals for more time to see results. To comment on the speech is Yomi Badejo-Okunsanya, lead partner, CMC Connect LLP. They are very much into perception consulting, and he's also the Director General, Nigeria Reputation Management Group of the Nigerian Institute of Public Relations.
The president has spoken to the nation just like some of us admonished and were advised. I have monitored the feedback or the responses to his speech, and most of it has largely been negative in terms of people felt that it fell short of expectations. There were certain things that people had expected to hear, which address still be managed so that we can get our children or the younger youth off the streets. The longer they stay on the streets, the more likelihood that the casualties will increase, and that will not augur well for both the administration and we as a the president. After all said, I hear you, and it's not just about him hearing, it's about him listening. They're two different things. You can hear somebody, but you are not listening. So I think the administration must take a step further by listening to the grievances and addressing some of them. I believe that not all of them can be addressed. I believe that not all their demands or the actions taken in terms of policies are reversible if we want to move forward as a nation. We need to just address those ones that we can and then crave the understanding and partnership for the ones that the administration cannot address at the moment. I look forward to seeing that. I think it's time that going forward, the president and his aides should get to work in engaging those people and engaging them. Not just the president. I would say that his aides, of course, the governors, and their aides, and even members of the National Assembly and the state houses of assembly must be able to join in this conversation. The president can still seize this narrative and can still turn this around for the good of this administration. And I do hope that that advantage will be taken. In the meantime, my appeal to the protesters is that they should stay within the ambit of the law if they have to protest, and we must make sure that the looting doesn't go on anymore. That's a very ugly part of it. No government will stand by and let that happen. They must do a bit more to ensure that the protest is not contaminated and the genuine reason why they are out there is met.
Asian markets again on the back foot as traders brace up for more global volatility. Japanese stocks saw the third straight session of declines as nervous global markets continue to fret over possibility of a slowdown in the world's largest economy, that's the US. The Nikkei 225 saw its worst day since the 1987 crash and was down again over 12%, tracking Wall Street losses. Also the biggest 3-day fall since 2011. Markets are on edge and in need of a positive catalyst. Crude oil prices also lower, tracking equities Brent just over $76 a barrel. Well, that's it for me on Global Business Insights. This is Badejo-Okunsanya. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Again, thank you so very much for watching. Bye-bye.